Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Pool Corp, POOL, the ticker is. Price at the point of filing is $284 and 33 cents. Please do your own diligence before investing into anything. This is not a recommendation, not advice. Let's get right into it. Description: Pool Corp, a leading pool supplier, distributor, is trading at a historical multiple lows due to recession fears and housing slowdown. However, Pool has proven its resilience through cycles and currently sits in an interesting spot with a large pool base, new market entrants, and a continued dominant position. Today, Pool represents a 57% upside opportunity by 2024. Company overview: Pool Corp is the largest wholesale distributor of swimming pool supplies, equipment, and related leisure products, and is one of the leading distributors of irrigation and landscape products in the United States. Pool Corp has over 400 sales centers in the US, Europe, and Australia and sells over 200,000 products. The company was founded in 1993 and is based in Covington, Louisiana. Diversified business makes it more sustainable than other building materials company. Though it might look like a company that is highly exposed to a new home construction, around 80% of Pool Corp's revenue comes from an already installed pool base. Additionally, 60% of the business is non-discretionary and it is tied to maintenance and 20% to renovation of the existing base. Though new pool construction is cyclical, renovation is less so, and maintenance is not cyclical at all. Despite the new pool construction and remodel has had a pull forward during the pandemic. This increase in pool count is a positive for pool, as it now has a larger base to capture for its maintenance business in the future. The company's maintenance business grew 5% during the 7 to 9 during the '07 to '09 period, proving its resiliency. Lastly, Pool Corp has been growing its commercial pool business at 15% since 2014, capturing a larger share of a 2 billion market that is less cyclical than residential. 10% market share today. Favorable macro and consumer trends. Migration in the US towards the Sunbelt states continues to grow, and according to the US Census Bureau, it is expected that population growth in the South and West will be 18% and 21% respectively through 2040. These are states where the majority of pools are, where pool season is the longest, and pool is ideally located in these markets to take advantage of this trend. Today, the average age of installed pools is over 20 years, playing into pool's business strength and maintenance and renovation versus new pool construction. Still, new pool construction increased to approximately 150,000 new units in 2021, but construction levels are still down 65% compared to peak historical levels. An average of 200,000 new units annually were built in the years leading up to the recession. For example, based on $850 spent per year on maintenance, a single pool should generate 17,000 of potential revenue over a 20-year lifespan. If Pool is able to maintain its market share of 37%, it should capture around 44,000 new pools, which represents an opportunity of about 47 million dollars of annual revenue, or 740 million over 20 years, just based on 2021 new builds. New pool construction and renovations are coming with increased content value spending. Based on companies' estimates, the addition of automation controls, sanitizing systems, heaters, robotic cleaners, among others, have grown around 100% between 2019 and 2021. And usually, these products come with a high gross margin. Entrance into the retail segment increases distribution mode, adds a more resilient segment, and brings higher gross margin opportunities. In December 2021, Pool closed its largest acquisition when it acquired Porpoise Pool, 250 million of revenue. Based out of Clearwater, Florida, Porpoise has two main businesses: a distributor and chemical operation, and Pinch a Penny, a pool products retailer. This represents Pool entrance into the retail market, with which mostly serves the DIY crowd. a $3 billion opportunity. The company is targeting 8 to 12 new franchises per year in the Southeast, leveraging its nationwide distribution, operational expenses, synergies. Most importantly, the company expects its gross margins to further increase from 30% to 32% thanks to franchise fees and better chemical sourcing. Lastly, the entrance into the DIY retail business could serve as an offset in a downturn as more people shift to maintaining the pool themselves. Strong moat, pricing power, and operating leverage. Despite being a highly fragmented industry and where many products are commodities, Pool still maintains a leadership position in the pool supplies distribution. One of its main advantages is SKU breadth, over 200,000 products and availability. During the peak of the pandemic, when many competitors ran out of the stock, Pool was the only player in town with the products. A former Pool Zone manager put it this way: I feel like Pool Corp probably did better than anybody else at having product. So they were probably getting customers simply because they had product. And kind of that goes along with that is you had a lot of customers that maybe was a loyal Gorman or a loyal Horner customer now. They can't get everything they need over there. Source takers. In this inflationary period, Pool has been able to pass along costs to customers and expect to continue doing so in the near term. In addition, thanks to inventory that doesn't go stale. Pool has been able to increase its margins they can build up inventories at lower prices and pass along further price increases as inflation expectations increase. As a constant acquirer, Pool has perfected its M&A playbook and has demonstrated its capacity to improve a sales center performance once they are part of the company's portfolio. In 2019, the company had only 96 per 364, 27% centers with an operating margin above 16%. In 2022, the count was 315 out of 365, 86%. Valuation. Pool Corp is currently trading at 12x forward EV EBITDA, below its historical average multiple of 15x, 1995 to 2022 average, and 19x 10-year average. Assuming the company trades back to 15x, the stock should trade around 448 by year end 2024, a 57% upside. If they trade back to its 10-year average multiple of 19x, the shares should trade around $570 or 100% upside from today's markets. Risks. Amazon, as the majority of its business is through distribution, this reduces the Amazon risk. The industry experts indicate less than 5% of annual sales for pool supplies and equipment are conducted online. Jeff Research. Revenue pull forward. Though there was a large increase in new pool construction and renovating during the pandemic, 60% of pools businesses is maintenance, which is more stable, and the new base of pools provides future maintenance revenue. Entry of Leslie's into Pro segment. Leslie's, a leading retailer, started building its wholesale and distribution business a couple of years back. Still, it is relatively small versus Pool Corp. Housing market. With mortgage rates around 7% and a slowdown in the housing market, it is obvious that there would be a slowdown in new pool construction. Still, management believes that a 20% decline in either new construction has an impact of 4%, but this would be offset with price increases in maintenance due to inflation, expecting flattish sales for 2023 if this happens. Catalyst. Housing market stabilizes and new pool construction doesn't decline as much as expected. Large growth in retail segment. Thank you very much for tuning in. See you next time. Please leave down below in the comments if you invested or will invest in Pool Corp, or if you haven't,